What I'm looking at is this race that's going on now between the president trying to bring down prices and address the affordability issue and the election.
The stock market has set 53 all-time record highs since the election. Think of that, 1 year.
The administration has a variety of policies it wants to put in place, and some of those policies could help. On the other hand, there's a lot of potential stumbling blocks for the president, including continued tariffs. But the bigger question is whether or not it's too late already to change people's views.
I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis.
So one of the more interesting things that I came across in my reporting is that the very best thing the president could do in order to address the affordability issue is to eliminate the tariffs. And most political observers think that's the last thing the president will do. Some economists have gauged that the biggest part of it is already in the price at the consumer level, and there's not more to come. Countering that is this notion that companies have pre-ordered and they weren't necessarily selling the goods at the higher tariff price, and they will be in the future. The other part of that is that companies have been absorbing the tariff costs, taking a hit to their profits because of that. Over time, they'll move to recoup their margins, and so that could mean additional tariff pass-through over the next couple months.
Last month, I signed executive order to ban large Wall Street investment firms from buying up in the thousands single-family homes.
The ban on institutional investors buying homes is not expected to have much impact, in part because they only own a relatively small percentage of the total housing stock. It could help at the margin just a bit. At the same time, it could hurt in that you're eliminating a potential buyer from the market. Housing prices are coming down. It's something that will help the inflation numbers look better, but it's not something that people are going to be able to bank every month when it comes to lower housing prices.
The great, big, beautiful bill, we gave you no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors.
People did not necessarily adjust their withholding for the one big beautiful bill. The bill was enacted in the middle of last year and was made retroactive. They may find that they have an unexpected windfall, for example, from their overtime wages or other aspects, and no tax on tips, those sorts of things. The refund should be larger in the first half of the year, but there's an economics question as to whether or not people will feel that as something permanent or end up being something that they have this one-time sense.
I'm also ending the wildly inflated cost of prescription drugs.
What's happening here in Trump RX could be offset on the other side with the rise of insurance and medical insurance costs, both naturally and because of the end of subsidies. So there's this offset in general when it comes to medical. So the president will get some help from Trump RX in a limited basis, but that may be offset in people's minds when it comes to the total health care bill. There have been a lot of policies from the administration that have distorted the take on the economy, so it's difficult to tell whether or not it's running hot. Maybe the best measure of that are the inflation numbers, and they've been a little sticky, suggesting maybe the economy is running a bit hot here. Most administrations have found that they're unable or otherwise incapable of timing stimulus to really affect elections because there are different lags between when a policy is enacted, when the bureaucracy puts it into place, when people feel it, when it has a stimulus on the economy. What we've seen in the polling is that once Americans set their opinions about politicians' views on the economy, they're pretty well set and very difficult to turn around.